Just because it's not the worst EV play doesn't mean Rivian stock is a buy. Underwhelming production guidance, plus a recently announced capital raise, has amply pressured Rivian stock. The odds of this EV upstart finding success or making a comeback grow slimmer by the day. Perhaps already in the EV also-ran category, it's best to sell or avoid. Let's dive in. Here's the Rivian outlook. Signs for a Rivian stock revival grow dimmer by the day. Welcome to Timely Investment Research. Ahead of Rivian Automotive's latest quarterly earnings release late last month, I expected investors would use any negative news as an excuse to bail on Rivian stock. This prediction proved accurate. Although there was good and bad with the early-stage electric vehicle maker's quarterly numbers, key elements of its updates to guidance underwhelmed. As a result, shares fell by more than 18% following the earnings release. Just days after experiencing this big sell-off, after an attempted recovery stalled out, Rivian experienced yet another double-digit drop. This was because of other news that bodes badly for future returns. After falling by nearly 23% since earnings, shares may find some short-term support at current prices, around $15 per share. However, don't assume it's all uphill from here for the stock. Here's why. Why Rivian stock has tanked twice in 2 weeks. On February 28th, Rivian Automotive released its fourth quarter financial results as well as its updates to guidance outlook. The quarterly numbers themselves were mixed overall. Revenue of $663 million fell slightly short of analyst estimates, $800 million. Earnings, or more accurately losses, for the quarter came in narrower than expected. For the quarter, the company reported losses of $1.87 per share versus consensus estimates of $2 per share in losses. Still, investors found one nugget of negative news and used it as a justification for the first of two sharp Rivian stock pullbacks over the past 2 weeks. In the company's production outlook update, management guided for 50,000 vehicles to be produced during 2023. This came in moderately short of Wall Street's forecast, which called for production of between 60,000 and 65,000 vehicles. After this post-earnings pullback, shares sold off yet again earlier this month. This was because of Rivian's announced plans to raise $1.3 billion from the sale of green bonds. These bonds, which are convertible into Rivian shares, not only are dilutive to existing shareholders, they may be a signal of further dilutive capital raises ahead. What may drive the next sell-off? Some may believe Rivian stock has become oversold following these two sell-offs. After all, Rivian may fall short in terms of production guidance, but at least its production problems aren't as bad as those with another high-profile EV upstart, Lucid Group, right? Regarding the forthcoming dilution, based on Rivian's current market cap, around $14 billion, this represents dilution of under 10%. Yet, while Rivian may appear better positioned than many of its peers, don't assume this will remain the case. In fact, this EV contender may already be an EV also-ran, and the market just doesn't fully know it yet. However, investors could take notice, causing another big sell-off for Rivian. Production and delivery numbers continue to disappoint. It's concerning that Rivian is no longer reporting reservation numbers. This may suggest that the company will be soon experiencing a Lucid-like drop in demand. Cash burn is already expected to stay high, but if losses come higher than expected in the coming quarters, the company may need to conduct further dilutive capital raises. This could also further dampen sentiment for shares. Bottom line. Despite Rivian losing nearly a quarter of its value in a matter of weeks, unrealistic expectations continue to be baked into its stock price. The market may continue to walk these expectations back as the company's chances of success or comeback grow dimmer by the day. More signs now point to Rivian having more in common with Lucid and the other struggling EV names, and less in common with established players in the space such as Tesla. Investors haven't yet fully come to this conclusion, but subsequent news developments with the company could bring them there. Before sentiment shifts fully to the bearish side, potentially sending shares to new lows, or maybe even to single-digit price levels, there's only one move to make with Rivian stock: sell, avoid. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.